Hello everyone, welcome back. Today we are going to do question number 9 of your textbook. Here is the question. Sudhanshu Limited has purchased one machine for rupees 22,200 on 1st April 2012. Its installation expense was of rupees 1800. Another second machine was purchased on 1st October 2013 for rupees 20,400 and its installation expense paid rupees 1,200. Every year, company provides depreciation at 10% under reducing balance method. On 31st March 2015, first machine was sold at 20% loss of its book value. From the above information, pass journal entries for first year and prepare machine account for first 3 years in the books of company. So let us see calculation for the first machine. Here is cost price of first machine, which was purchased on 1st April 2012. Cost price is 24,000. It was purchased for rupees 22,200 plus installation expense. That will give us cost price, that is 24,000. Now, depreciation at the end of first year would be 2,400, that is 10%. Then if we deduct this, we will get book value as on 1st April 2013. That is closing balance at the end of first year, or we can say that opening balance of second year. Now, for the second year, we will calculate depreciation on the opening balance, that is 21,600. So here 10% of 21,600 is 2,160, as this is reducing balance method. So if we deduct this, we will get 19,440. That is the book value as on 1st April 2014, or we can say that it is closing balance at the end of second year or opening balance of third year. Now, we will calculate depreciation at the end of third year. So here we will calculate it on 19,440, as this is the opening balance of third year. So here 10% of 19,440 is 1,944. And if we deduct this from 19,440, we will get book value as on 31st March 2015, that is 17,496. That is book value as on 31st March 2015, or we can say that it is closing balance at the end of third year. Now, it is given in the question, the first machine was sold at 20% loss of its book value. So here on 31st March 2015. So here book value as on 31st March 2015 we have calculated, that is 17,496. So 20% of it is 3,499. And as it is loss, so we will deduct it in order to get selling price. So here we will get 13,997, that is selling price. Now let us see calculation for second machine. Here cost price of second machine on which was purchased on 1st October 2013 is 21,600. That is, it was purchased for rupees 20,400 and installation expense is rupees 1,200. So 20,400 plus 1,200, that will give us cost price of machine, that is 21,600. Now here we will calculate depreciation at the end of this year. So here in this year, that begins from 1st April 2013 and ends on 31st March 2014. So in this year, we have utilized this machine for 6 months only, as we have purchased it on 1st October 2013. So from 1st October 2013 up to 31st March 2014, there are 6 months. So here we will charge depreciation for 6 months only. So here 6 months depreciation would be 1,080. That is 21,600 multiplied by 6 by 12. multiply by 10 upon 100. 10% is depreciation rate. So here we will get 1080, that is 6 months depreciation. Now if we deduct it from 21,600, we will get 20,520, that is the book value as on 1st April 2014. Now we will calculate depreciation at the end of this year. So here depreciation up to 31st March 2015 would be 2052, that is 10% of 20,520. In this year, that begins from 1st April 2014 and ends on 31st March 2015. In this year, this machine was with us for whole year. We have utilized it for the whole year. So here, whole year depreciation will be calculated. Now, if we deduct it from 20,520, we will get 18,468. That is book value as on 31st March 2015. Now, let us see how machine account will be prepared. So here is our machine account. First, we will write heading, Ledger of Sudhanshu Limited, machine account. First, we will prepare a machine account for the first year that begins from 1st April 2012 and ends on 31st March 2013. This machine was purchased for rupees 22,200. So here on debit side, we will record it. And in particular column, we will write to bank account. Date is 1st April 2012. Then installation expense was paid. So here we will show it separately, 1800, and in particular column, to cash account will be written. Now at the end of this year, we will charge depreciation. So here we just calculated depreciation for this year. It was 2,400. In particular column, we will write by depreciation account. Now, total of debit side is more, that is 24,000, which will be written on both the sides. Now, if we deduct depreciation, that is 2,400 from 24,000, we will get 21,600, that is closing balance of machine for this year. Date is 31st March 2013. Now, this will be transferred to the next year and it will be called as opening balance of the next new period that begins from 1st April 2013 and ends on 31st March 2014. So here we will write to balance brought down. Amount is 21,600. Then in this year, another machine was purchased for rupees 20,400. So here it will be recorded on debit side of machine account. In particular column, we will write to bank account. Date is 1st October 2013, the date on which this machine was purchased. And here again, installation expense of this machine was 1,200, which will be shown separately. And in particular column, we will write to cash account. Date is 1st October 2013. Now for this year, here we will charge depreciation. Here depreciation for first machine was 2,160 and depreciation for the second machine was rupees 1,080 that we just calculated, and total amount is 3,240. So 3,240 is the total amount of depreciation of both the machines. So it will be recorded on credit side of machine account as it reduces the value of the asset. So now here total of debit side is more, that is 43,200. If we deduct depreciation, that is 3,240 from this, here we will get closing balance at the end of second year, that is 39,960. Now this will be called as opening balance of the next new period that begins from 1st April 2014 and ends on 31st March 2015. So here again we will charge depreciation. Here depreciation of first machine was rupees 1,944 and the depreciation of the second machine was 2,052. So here total depreciation is 3,996. Now as this machine was sold at the end of at the last day of this year that ends on 31st March 2015. So here we will write the date on which it was sold, that is 31st March 2015. So it was sold for rupees 13,997 That too we have calculated. That is the selling price of machine, and in particular column we will write by bank account, as by selling this our bank balance will increase. So here our journal entry would be bank account debit to machine account. So here we will record this amount on credit side of machine account, and in particular column we will write by bank account. Now as it was sold at loss, that is 3,499, so it will be recorded on credit side of machine account. In particular column we will write by profit and loss account, that is loss, date is 31st March 2015. Now if we deduct here, total amount in debit column is more, that is 39,960, and if we deduct the amounts in credit column, that is 3,996, 13,997 and 3,499, if we deduct all these amount, we will get closing balance, that is 18,468. So this is the closing balance of machine at the end of this year. So here we have completed this chapter. I hope it is clear to you all. Thank you very much.